Hey, welcome back to another weekly review video. We wanted to do it and just tell you what's going on in the world because it's been kind of an up and down week, a little bit of back and forth as we're getting earnings from these companies that are coming out. So let's talk a little bit about that.
Yeah, for the most part, earnings really have been solid, especially out of the big cap tech names. For the most part, we've had some anomalies out there like Meta or Facebook did not deliver and were punished severely.
But then you get a name like Amazon.
Amazon, Apple, for the most part, Microsoft, Google, Alphabet, in our opinion, have had exceptional earnings and have been rewarded. That being said, underneath the surface of the general market, there seems to be some kind of weakness setting in. We continue to see underlying names, everything from financials to materials, consumer discretionary staples that are not acting as well. It is probably, Logan, in my history, one of the most narrow markets we've seen in my career.
Describe that a little bit. What do you mean by narrow?
Well, okay, so the S&P 500 is what's called a market cap weighted index. And that simply means that a company's market cap, and that's the total value of a company. You take the stock price times all the shares outstanding, multiply it together, that's market cap. Market cap weighted means that the size of the company, the market cap, dictates how much of it is represented in the S&P 500. For example, this week, for the first time in history, we had a company, NVIDIA, surpass $5 trillion in market cap.
Yep.
Okay. The S&P 500 has a market cap of around $56 trillion in total.
Right.
All 500 companies.
Yep.
You don't have to be a mathematician to do some quick math and go, now, wait a second. If NVIDIA has a $5 trillion market cap in a S&P 500 that's market cap weighted, they are representing almost 10% of the entire market.
Exactly.
Then you look at Apple, Microsoft, Amazon. Those market caps are also in the trillions.
Right.
Therefore, there's a handful of stocks representing most of the movement of the S&P. Now, for now, that's fine.
Because it's been good.
They've been really good.
Right.
Those earnings have been good. Those stocks prices have been good.
Even when some of the other 493 names have not done so good.
That's correct. They've been okay. They've been better than they have been in the past, but they certainly have not been as good as those names. And again, if you think of a boat, think of 10 people in a boat and we're cruising along, but one person is like 500 pounds.
Yeah, right.
Okay? I'm just saying. This is a very big guy. All right? I'm gonna say it's a guy. He's a big dude. Now he's sitting in the boat and he's drinking his tea and he's loving life. No big deal. And the boat's cruising along and the 10 people might get up. They might go grab something. They do something. Doesn't rock the boat.
Yep.
They're $1.50, $1.25, $1.60, 200 maybe. I don't know. That guy gets up.
Moves the boat.
The boat is moving, right? That's what these companies are like. Now, right now, they're sitting idle. They're enjoying their tea, wine, whatever they're doing on the boat. No big deal. The concern is what happens if they do start to move.
Right.
And we know historically, stocks don't go up forever. At some point, they will experience trouble. And that's sort of what we're preparing for. On one hand, you have these companies doing very well. On the other hand, you have a prolonged government shutdown. You have delays and cancellations at the airport. You have earnings that have not been great.
And I mean, if we just look at it, there's people that are struggling out there, quite a few.
You have unemployment that's ticking higher. The Fed cutting rates because of that.
Right.
The economy is slowing, but we have a few companies masking those underlying issues. Precisely why we have taken the position to be more conservative in our positioning for clients at this stage and feel wonderful about it. I sleep very well at night with our current positioning.
That's exactly right. I mean, when we see this kind of thing in the market, we're just taking that defensive position and backing off a little bit of the risk to make sure, hey, at some point, we truly believe there's going to be some issues that come along with those big names and not just some of the ones under the surface.
That's right. And then we will hopefully take an opportunity to re-engage with some of the opportunities when prices come back to us.
That's right.
And look at capitalizing on that weakness.
Yeah, and putting money to work, being opportunistic and not fearful during those time periods.
That's right.
Anything else to add?
Well, we're entering a new month, which means I now have 6 months until I step away. It has been neat to watch you, even over these last 30 days, as I have told everyone definitively I'm stepping away. It's been fun to see you rise to the occasion and lead. Logan's been doing a great job. Our team's been doing a great job. And I can't thank you enough for all the wonderful comments and emails that I have gotten wishing me well. I'm not going anywhere yet, but wishing me well into the future. And I can't thank you enough for that.
Absolutely. And definitely check out, I do have a radio show that's been going out. It's called Savings and Cents. It's Sunday mornings, 8 to 8:30 a.m. We're going to be getting that on a podcast to get out to you soon. But check that out, 6:30 WLAP, if you'd like to watch and learn a little bit more about what we're talking about on there. It's a lot of fun. I've been interviewing some different folks. Go definitely check that out. Allie and I do a great episode for this Sunday.
Great. Wonderful.
All right, everybody have a happy Halloween out there. We'll talk to you soon.